So 7G Bioventure is really like a new fund that I'm incubating, and we try to, get into like doing well by doing good. And we do believe that disease has no border. That's why, patient capital need to be the global patient. Sure. Just to the next slide. Just go down, right? Oh, yeah. So we do believe that the 7G stand for, you need to actually fortify yourself as a good trade. First of all, you need a grit, and then have a gratitude towards surroundings, and then eventually you can have the grand vision, and then have the grace. But it's really like, you will have a outward interaction that, you can really achieve goodness and also take care of the good. A little bit of myself. I actually got trained in molecular biology. I grew up in Shanghai. I went to the college study as well as the pharma service over there. And then I came to this country in 1992. Got my PhD in molecular biology at the Cold Spring Harbor, and then soon at Stony Brook. Then I got trained as an immunologist. Went to Wharton for my MBA. And from there now, I really sort of get into the grooves that try to have the good interface between the life science and finance. So I engage in the different aspect of the investment in the life science, starting from the angel all the way to the public market. So I was the senior analyst and PM at the Franklin Templeton Investment. That's a local big asset management company. And I was a partner at the Sixth Dimension Capital. It's a cross-border healthcare focused VC fund. And for the last 2 years, I'm the head of the global bioventure investment at the Hill House. So a couple examples I want to showcase that, I recall there's a lot of like people actually come from China, but they stay on, they excel. So I call them like a hypogui. So that's one leader from a big company called AstraZeneca, Dr. Bing Yao. He, in the early part of 2018, had an idea to say, the company want to carve out the whole autoimmune disease unit because of their strategic sort of reorientation. And then he was the leader there. Eventually, is that I led the deal. When I was at the Sixth Dimensions Capital, I persuaded Hill House. Temasek is another, Singaporean sovereign fund, as well as the Boyu, together with the CDC, we're putting up the $250 million. So get like about 50 people led by Bing Yao, and then 8 assets from the preclinical stage or the late stage at the phase 3 trial. It's really took us like 1 year to have all the negotiation and outcome. But at the early of 2018, the company sort of founded and everything is in place. We got lucky that it went IPO in the later part of 2020 and then just got bought by Horizon Therapeutics for over $5 billion recently. It's not really like great financial return, but it is really to see that once you focus on science, focus on team, and also true unmet medical need in the autoimmune disease area, that you can really like doing well and also by doing good. Another case is that we found like there's a young startup, so there's a company in Belgium. They have great world-class medicinal chemistry and also BD capability, and they try to actually have the landing in the US, basically in the Boston area. So together with the top funds in US like MPM, and then also top funds like HPM from Europe, 6DC participate, co-led the Series A. And the enterprise value, which you define like the valuation and strip away all the cash you have, is actually 0 or less than 0. The beauty is that the Belgian government actually gives them 22 million euros of free grant. So we captured this great opportunity and then leveraged the bioamphibian operation. We did investment, I think, in 2019, and then went IPO late last year. Right after that the Gilead Bristol Myers Squibb, and particularly Roche, they launched 2 large phase 3 trials on a target that when we did the investment is really at the preclinical stage. But Roche really pointed out, they actually go all in. They launched 2 phase 3 trials, and then suddenly this company riding on the wave and get the public market support when IPO with a very good valuation, and then the financial return actually is quite significant. Now, then I will talk about sort of the third case, which is kind of the category. It's called Haigui. So there's a veteran R&D leader in the orthopedic therapeutic area. He's really like an executive leading an effort at Amgen, and before that is Pfizer and UBS, all in the same category. He's the world leader in the research in that area. Like they try to find a therapeutic product which is fortified to address a very differentiated unmet medical need. So we actually trace down the founder in certain part of China. It's called Guangzhou, and we led actually the speed plus one with $60 million led by Hillhouse. At the time already sort of become the lead at that effort. And the company actually is always, good company as you know, like they always sort of deliver and under promise and ahead of the schedule. And this is a good example by the founder is I think it's already over 60, and he has the aspiration saying, now I want to go back to China and leverage all the local resource. And then he identified, assembled a great team, and together, I think they basically push all the product actually into the clinical stage. This is going to be actually a very great, a global company. So whenever I tell my investment company, either in US, in China, I always say, you're going to be a global company. At least you have a mindset and aspiration. You will have a global talent, and you just happen to be in some regional area. But if you're really doing well and believe that disease has no border, addressing the true medical need, and then you will become a global player. So now with all that said, I also want to step back and then look into the investment at the fund level. There's an entity called SoftBank Vision Fund. Right? They're very interesting. They are like the generalists, but they actually have a weighting in the healthcare for the last 2 funds. As you know, the first one fund, they're getting a little bit more aggressive, like the WeWork and all that, have some hiccup. But I think actually they call it a visionary fund, and they're doing something actually quite disruptive and visionary, and which is really can be examined at their trial and error in the healthcare area. So they did a 44 deal. This is actually according to the latest quarterly report, the annual meeting. So I download actually from the SoftBank annual meeting, but it also has a section on the Vision Fund. So 44 deals so far at the end of first quarter this year, and then $6.2 billion deployed. And about that, 8 deals actually is in healthcare, and then take about their 21% of the deployed capital. And you can see that there are AI in drug and R&D, which is called Excel. It's the cross-border US and China sort of play in the pharma R&D. And then there's a digital therapy product. So all of a sudden, you are not really talking about small, large molecule. It is really digital, like an app, the interaction between the patient and the portal, as well as the caregiver, pair therapeutics. The biosensor, big data, wearable sensors, but collecting the big data is kind of like what the Verily is doing, part of that. And then gene therapy, really on the gene regulation side, which is also supported by a good top VC fund, gene editing, writing, etc. Biomanufacturing, that's Arch and other players together with the Vision Fund. So you know like how you can be better, cheaper, faster. And one bottleneck actually is the large scale, highly efficient, lower cost manufacturing on the large molecule. It could be the messenger RNA, it could be the cell, it could be the monoclonal antibody. But that actually become a bottleneck. And then another thing is targeted discovery. It's a Vivido, which is a San Diego company, has a more systemic biology look. I actually look into that company. Another one is the Seer proteomics platform. So you have a different sort of way to slide die and looking into the system biology. And this is a good way to provide enabling tool for that. So I would say the jury is still out, but some of the player will be a good winner. Some of that is already went IPO. The performance, well, according to a very robust private market, which is quite well. So what is the VC investment in 2020 in the US? It is a record year. So they raised about $17 billion, but they actually invested a whopping $44 billion in the US. And then the European investor just plugged in $8 million. So altogether, that $52 billion is sort of 50% up over the past 2 years. This is just the mind-boggling, and too much there, like it's sort of too good, and then you have to actually exercise some caution. It's you say. So you're talking like oncology, platform technology, right, enabling, and then now neurology as the final frontier is the toughest and highest fruit that the lifestyle tree is there. But we started with an easy one, right? It's sort of monogenic, have a point mutation, so you know exactly the etiology. For the Alzheimer's disease, we don't have a clue what exactly is the cause of that, chronic neuronal degenerative disease. So we start from the easier task and then gradually going to go to the tough one. And then you have always had orphan disease, right? I talked about orphan disease in the CNS area, but eventually, last year we had a pandemic. All of a sudden, the whole nation and the whole world would wake up saying we cannot actually just sort of delay the problem. The pandemic will stay, and maybe there will be it become like an epidemic. And then there will be a new sort of infection threat coming in, and how we can be prepared. It's coming from prepare for the spectrum of the new vaccine, or actually stockpiling the antiviral. And you have to prepare. It's not just from coronavirus, which is COVID-19 actually become part of it. There's many more. So how from top-down government policy level to get ready, and how the interaction between private and public enterprise can collaborate together. It's a big question. Oh, yeah. In China, it's a record year. They invested in $12 billion ever. And then you can see that most of that is in the biotherapeutics, biopharma, and the health tech actually is going very strong. That's together, let me see, I'm sorry. It's $6 billion in the biopharma last year, and health tech is about $1.3 billion. And then diagnostic tool because of pandemic. The IVD is actually really get it's a banner year. It's $2.8 billion. Medical device, as you know, there's a valuation arbitrage. In US, the multiples and time to exit for the medical device actually is always a second shot, less second shot. But in China, it's different. The valuation is still very robust. So there are a lot of actually the outgoing business deal from US to China, and then which is showed $1.6 billion investment. What's the difference of the two markets? They have a pro and cons. But for example, in China, there's $12 billion government support during the last 4 years. So it's really is the public sector basically bankrolled a lot of activity. And this is just a monetary impact, right? It says a lot of policy level at the biopark, just like JG Lake, and doing so well, and also the Suzhou Industrial Park, it's really the first mover there, and we all benefit, more or less from there. And then there's a NIMBA, right? It used to be called a CFDA. We strive for more transparency, harmony, and can become, consistent about their operation, but also to be collaborated, mostly actually, to the other entities like in the US and the greater Asian area. And then also 14 multinational pharmaceutical companies. They created a lot of opportunities for China as a nation. So they recruit, train, and retain the local talent. But now all of a sudden, the R&D centers like by Eli Lilly, AstraZeneca, Novartis, actually are downsizing, for example. And you cannot really predict what big pharma going to do now and next, but they change. But their problem or challenge actually is a big opportunity for those talent that get attracted and trained in China. But also, I think, the VCs, the government, and then the private enterprise, big and small in China, is really poaching their talent and ready to, get their experience and expertise. But a lot of exactly from those R&D centers, actually, they strive out. They want to form the new startup themselves. So it's a perfect opportunity, I think. And IP protection is rapid and internationalized. And the PE multiples is still, as you see, that from the the starboard and also in Hong Kong, it's just like it's mind-blowing. Could be in a range of the 50 to 100x, which is compared to 10 to 40x, even at the very robust market in the Nasdaq stock exchange. But still, in 2020, in US, it's 12 billion venture investment, largest ever. But they strive for the first-in-class innovation. Otherwise, you have no differentiation, right? And that's actually is very interesting. Remember last week, NIMBA actually tried to have a proposal saying so-called best-in-class or first-in-class drug. Now you need to have a head-to-head compare to the active best-in-class options available in China. So no longer is that you will always claim that you will be a best-in-class or first-in-class, but only do the one-arm trial or actually compare to placebo. Now it's real. Like you have to have the head-to-head compare to the best available set. That's real now. It create a lot of challenge, but also opportunity for a true innovator. And then you will have the multidisciplinary system biology in yours. And because here is a photograph, like the first class academic innovation is still here. So let's actually also look into the Barclays field. Barclays is famous for like every 10 years, they just looking forward, say what will happen actually in different industry. That in the healthcare, what they do is that, they have, what's the level of impact on the what there will be a realization. So you will see that also the pandemic response technology is become so real, and then it's a unmet thing, but predictive healthcare, remote patient monitoring, AI drug discovery, and I hope that this will be like a high expectation, high promise they get into something real, like it's a hit, and it's a druggable, innovation, and the longevity technology, right? It will become like the healthcare become wealth care or wellness care, which is so important, and then the remote patient monitoring and telehealth. I think it's getting there, right? There's a teledoc. There's an equivalent in China. It will actually, go from here. So a couple trend sort of I want to discuss with you and both sides of the Pacific Pond. So in the first half of this year, there's a 9, I think, better in class or best in class product all licensed from the sponsors in China into US players. So that is actually very encouraging. And then with that, I think China will have first-in-class innovation. As a matter of fact, when I visited China for the last 3 months of last year, I actually experienced that one returnee have a true like a first-in-class, starting from identification of biology, molecular target, and then also the hit. The hit actually reinforce the validity of the biology and the target, and then he's doing the lead up. And I think actually this one not only was the first in class in the mechanism and biology, but also first/best in class hit that they were coming. So it's very exciting. After 17 years sort of following and then sort of side-strapping and observing on the China life science R&D, something is coming. So we are, even though we are behind like 10 years after South Korea, and then maybe 20 or 25 years behind Japan, but we are there. After all this top-down and bottom-up innovation and group effort, I mean, this is just a question of time. But also, I think both healthcare market call for the faster, cheaper, better innovation had to be affordable. How we to do that? in the category of the digital therapy product, like the Pear Therapeutics is offering. But also seriously, like, we have so many like a clinical trial running on so many autologous cell therapy products, right? And then I think Kite is doing that, and together with Busan, they're all great. They are like a world-class quality, but I think they also realize, and they're doing it, how we can make it off the shelf and make it universal. So you can have a one large sort of production for 1,000 patients, and then you don't need to wait for 3 months, 3 weeks, and then about $100,000 in cost. In China, I think it's at least maybe just a third of that cost, but still it's kind of prohibitive, right? So you have to go to the off-the-shelf road. And then I think the couple companies in China, many companies in the US is doing that, different module. And then also you have about manufacturing in a higher efficient but low cost manner. I talked about a couple of examples. And then gene editing, cell therapy, great products in tissue tropism. I mean, now we have like a 10 to the power of 17th of the virion to deliver into patient with a genetic disease, hoping for systemic delivery. And that cost itself actually is prohibitive. But what if actually you have a potion that directly go to heart or directly go to the organ of interest that can cut the initial input of the material dramatically at maybe like an order of 1 log. And then if we can raise the transduction efficiency by 10 to 100, and then the material initial input will be dramatically down. But eventually also how you can dial up and down the expression level of the transgene of interest in a very precise way. Then you have the multiple effect, right? You can have like 3 to 5 log of reduction of the initial input, but in a very precision way. And in a way also you reduce the potential side effect. And then messenger RNA is red hot. I think it's too hot because messenger RNA cannot do everything. It's very ideal for the multivalent vaccine and also in a very short time to delivery. But in terms of like cancer vaccine, to address the cardiovascular disease in a multiple dosing, repeatable chronic using, the challenge is all there, and the tropism, the production cost is still there. But you will say, there's some technology called SAM, right? Self-amplifying messenger RNA. Itself actually has a pro and cons. I don't want to get into details, and also further modification of the RNA backbone. Those two discoverer, inventor at the UPenn, my alma mater, they will get the Nobel Prize. It's just a matter of time because they changed the world. They saved millions of people's lives. But we can do better. It's just the beginning. And then also there's a breakthrough in the CNS degenerative disease. So now from the EduHealth, there's a lot of controversy. The FDA approval for the Biogen RDX product. Is that really driven by science, based on data? Or is that really like, it's the patient active group doing that? But a couple key words, right? It's a conditional approval, but still it allows them to have a whopping 8 years to have the phase 4 study coming out. And they now sort of emphasize addressing the mild to moderate population, not the whole population, because if you prescribe all this to the very mild to the chronic severe disease population, the hit on the healthcare, Medicare Part B is over $25 billion. The budget for the Part B right now is $25 billion, and already spent over the limit. So you're going to bankrupt the whole Medicare or the healthcare system. So we have to address this the situation. And then also AI and machine learning is so hot. Very exciting, but as a sort of the old school molecular biologist, I cannot understand. And we do have a talent and investors like Alay can guide us to at least sort of offer a black box for us. Say, I did it, and this is the sausage grinder can have a hit, the sausage coming, and then I will use the traditional way to look at and assess the hit and to say, this is incredible. Effectively, you're saving the time to idea to the hit, by 2 years, let's say. It's already dramatically, versus the previously, 7 to X year. But I have to rely on the final hit and to convince not just me, but also the commission and the regulator saying, now actually is the moment. But I think it will come. And if we miss it, ignore it, and it will be very silly. The cost will be very huge. So everybody, still want to learn from it, but they're the pioneer. And then also there are a lot of VC is doing a pioneer. It's the TMT guys actually looking to the molecular biology. They say, I want to try it. But they also apply the TMT-like evaluation, which actually prevent us to invest it. But we will see, and we want to learn. Opportunity was this. So what's the opportunity? I think on the geopolitical level, since a new partisan push, right? They want to add tens of $billion funding into the National Science Foundation, but also NIH as an organization. And then also there's innovation hubs, not only in the greater Boston area, but here. We have Alex Zhang, form a new, end-to-end wet lab, equipped incubator. I think it's great. And what's the threat? I think there's also geopolitical sensitivity. You will have a DD, sort of the, data security, and also in the healthcare, you will be very careful that not to get the patient's specimen or personal data, across the border, either from US or actually from China. It's become like a hot red button. And then also there's a competition, but let's face it, greater Boston area actually is kind of a big threat for us. But I still feel like, disease has no border. So that's why we'll have a cross-border collaboration and business model. But we have to, basically proceed with caution. A lot of people here actually have a lot of experience, and the environment actually dynamic is changing, and then we have to adapt. And what is the new norm, after the pandemic for the industry and for us? That could be just an open question and open discussion. But how actually are we as the clinician or scientist or investor with the global or cross-border mandate and context, how we can adapt and survive? That's another question. So I want to just leave it here. We can have a one-on-one discussion, at the breakout session. Thank you very much.
Let's go in 11 minutes. Sorry, folks. We've got to do So we've got to do the ruffle for the time at 5 o'clock. So let's do it right now. So this is the Avalon gift card. Just one.
One lucky.
Who's the lucky? So can we use the number?
Okay, the number is 7551860. All right. He's my good friend, almost like we colluded. So
yeah, thank you so much. This is working. So I will also speak in English. I will be before our dinner banquet, so I will be the last to speak to give you guys a quick introduction about GG Lake and also our current company, Orida Holding. This is us. So basically, this slide shows who we are and what kind of service we're providing. So at a very basic level, we are running this co-working space. So this entire building is 18,000 square feet, two-story, initially built in 2013, very beautiful. Since right now we're operating during the COVID, but all the co-working space like WeWork took a big hit, but we are recovering. So if you guys need a office space, feel free to let me know. This is only the facility, and on top of this physical building, we're trying to build a community here. So right now we have 16,000 email subscribers. About 70 of them are Chinese Americans. A lot of them are entrepreneurs and also investors and innovation partners. And based on this community, we are trying to serve the purpose as a platform to serve on both sides. So both investors and entrepreneurs. So investors, on investor side, we provide deal sourcing, deal referral, and also before COVID, we got a lot of delegations coming from China. So we help them host a local events, cocktail party to arrange their schedule. And on startup side, we are actually serving on both angles. So from US to China and also from China to US. So we will emphasize on this one shortly. Just some slides. Let's quickly go through this. Very beautiful co-working space. Oh, by the way, if you guys ever need a tour, we got a co-working area on the second floor. Feel free to check it out. Previously at this very venue, and we host a lot of community events. So this is investor events we previously hosted. So because following, we will have a slide introducing our fund of fund. So basically, they have a delegation here every year. So this is the service that we can provide to startups. So basically, we start with this pioneer program. So basically, as applicants, they can have up to 40 million, 4,000 万 RMB for the stimulus package. So basically, that's encourage you to set a company in Suzhou SIP Industrial Park and to start a local business. And at the same time, Ariza Holding also keeps a close engagement with the companies to discuss the potential investment opportunities. And also, besides Ariza's, because we are headquartered, our parent company is headquartered in Suzhou, China. We have a wide venture capital investment network. So basically, we can help the company to do the localization, and also we help the company with the fundraising. So, and all those services we're providing to startup for free. Some successful cases here to share. So this is the very first company called Catchpop. So the founder, I think many of our guests here know this guy, Tang Zicheng. He is also the founder, the investor at Berkeley Skydeck Fund, and he himself got a side project, He's now back in Suzhou and with all of his families. His project owns the Pioneer Growth in the last year. And the Maigongchang Ant Factory. So basically, it's a platform for non-standard industrial raw material. So Mao Lingcai, Professor Mao Lingcai, initially from Beijing Hangkong Hangtian Daxue, and I met him previously at AAMA trip back in 2017, and he said he got his project going, and he was wondering if Suzhou can be a good fit, and we chat a lot on the call, and he eventually decided to set up our company there, and he owned the Pioneer Core. That's last year. And Linked Bio is also a company that owns the Pioneer Incubating Prize last year. Founder Greg Lee, previous Pfizer scientist, so it's basically they're located in Suzhou right now, and they're discussing building a lab together with us in Boston. So, and also from the China to US side, we're helping a lot of companies, not only the companies from the SIP, but beyond. So we help them with all the way from the incorporation and to marketing, and also connect with the local partners and investors. So that's pretty much about JJ Lake. So a few slides about Ariza Holding, our parent companies. So basically, Arena Holding started all the way from 2001, started as a venture capital firm. And so it's a 20 years old company. And right now it's a holding company. And under this umbrella, and we set up different kind of funds based on its purpose and based on its stage. So we have so far made more than 900 investments, and the asset size is 55 billion RMB under management. So this chart shows clearly the structure. So as you can see here, we got seed fund, VC, PE, we got dedicated IC fund, and also we have a founder fund. So seed funds are Reza Ventures, it's our USD fund. Our partner Alex Liang is here today as well. And we got a direct investment VC funds. That means all the monies are from the corporate. We got the Hong Kong platform. We are helping the SIP to manage their government funds. And also this financial service wise, this is where JJ Lake stands. So we serve the purpose as a platform to connect both. So this is our seed fund. So as you can see, Zhang Yu and Alex Liang, they are our USD fund partners. So some successful cases here. Our VC funds, PE and MA funds. So this is our founder fund, Yuanhe Chen Fun. We have so far invested in more than 120 sub-funds. That includes a lot of top tier VCs back in China. Some of them have offices and operation here in the US. For example, like Nelson Labs Venture Capital, GSR, etc. So this is an ecosystem. Here in the US, we have JJ Lake. And also back in China, we have a Stanley financing company. So basically, we're doing a similar thing to build the community and to help the startup grow. We got the JJ Lake Startup Compass. We help the startup with financial advising, connect them with resources. So this is our investment focus. So on the Ariza-wise, we're very tech driven. So we're particularly interested in biotech, IC, and also big data driven AI. So far, 140 plus IPO companies. Yeah, that's pretty much about us. So we're on social media. If you need more information, feel free to check us out. And thank you guys all again for coming here. This is not the end of the event, but we're about to have the dinner banquet. So let's be back. What's the time now? 6:05. So let's be back at 6:55. Upcoming we have 3 more panels. We have 3 more sessions to talk about the exit strategies and also CPS and also the cross-border collaborations. So now let's enjoy our dinner. All right, thank you very much. Yeah. So let's get started for the second half of the event. So they were very honored to have Elise from the Risk Capital and 500 Startup together with her is Alfred. So they're going to talk about the exit strategy with a fireside chat, including like stacks and pros and cons, etc. Yeah, let's get started.
We have 20 minutes, right? So
well, it's a small group, so feel free to take your time.
20 minutes, 20 minutes, oh my God. All right, maybe we're going to do a quick introduction of both of us. And then since we only have 20 minutes, we have tons of sort of exit, like latest trend and strategy that we're going to talk about, from the hottest topic like SPAC to IPO to direct listing to M&A to ICO and all kinds of things. So my name is Edith Yang. My background is, I was just sharing with Connie. My background, actually, I started as a developer, mostly enterprise software, 10 years, SQL, Oracle, Autodesk. And after 10 years enterprise, like enough, I actually worked on a mobile browser called Dolphin browser out of Wuhan and Beijing. And I actually ran their US business, sold to a Chinese gaming company called Changyou. And after that, joined 500 startups, sort of run did about 50 early stage investment. Now we raise capital. We're a $100 million fund, mainly focused on early to A, all software infrastructure. I don't do hardware, don't know healthcare, data, communications, infrastructure, and fintech infrastructure. So that's me. And Alfred, longtime friend, and quick introduction.
Thank you, Edith. So my background is I've been in the venture space for a little over 20 years. Started about 2 bubbles ago in the 2000 era. I started with a corporate venture fund, part of Panasonic. I was there for a couple of years, did 6 deals there, had 5 exits out of that fund. And then I went to China in 2006. I was part of 2 groups there, IPV Capital, and later on joined a fund of funds called eMay Capital. And now back in the Bay Area and doing deals independently. So, and then within the exit space, I've been involved in sort of 2 areas. One, I'm involved with a EV company for quite some time and looking at exit, kind of helping them with the exit opportunities. Happy to share about that. And also I'm a board member of a public company based listed in Hong Kong. So I'm happy to share a little bit about that as well.
Yeah, so on that note, let's start with the topic of SPAC, because it's been such a big topic these days. And, Alfred, obviously you looking at a lot of EV, and EV been actually a hot vertical in terms of SPAC, but sometimes it's not so great. What do you think? Do you think is a big SPAC bubble going on? Is it going to burst soon?
Yeah, that's a very good question. I'm just read out some stats here, right? In 2020, roughly 241 SPACs raised about 83 billion. And in 2021, 366 SPAC IPOs raising 111 billion, and most of it in Q1. And so obviously this is, a record amount of money for sort of a new exit vehicle. I think SPACs were not considered mainstream in the past. I think in 2020, I believe we had more money raised in SPACs than probably the prior 10 years. And perhaps in Q1 of this year, more money raised in SPACs than in all of last year. And so it's quite crazy, quite a large enthusiasm for this asset class. Obviously, there's been a lot of rotation recently in the market. And so, we're not seeing the 3 to 5x returns in the SPAC market, but, it's roughly still in the 20% range. And so, people are still optimistic about this asset class. But I think, there's been a wide range of returns. So that's affected sort of the interest in sort of the long-term, long-only fund investors, right? And so that's affected the PIPE market significantly. And so, I think there are roughly about 150 transactions that are announced that are yet to close. And so that's also affected kind of the recycling of the money. And so I think we're kind of, I wouldn't say it's burst or anything of that sort. It's certainly deflated, right? And it's sort of prolonged. And, I think there are still a large number of SPAC entities that have, typically come out with a 2-year time period, looking for targets. And so, people are aggressive, but, in terms of closing the deals, I think it's certainly a little bit challenging. I've seen cases where, SPAC deals are announced, and then the PIPE market comes and deals get cut in half in valuation, for example, right? Mm-hmm. And also I've talked to many entities looking to raise risk capital, trying to start new SPACs, and the terms are much more challenging because many SPACs are trading at $9.90, $9.80, and so SPACs, capital and trust, people are expecting for $100 million, they're expecting $101 or $102 million. So a lot more risk capital going into capital and trust. And so that it reduces returns for all parties, right? So again, everything is about risk return, and certainly there's a bit more risk in the market right now. And given the how things are trading, the returns are come down quite a bit. So I think you have to see how that plays out. But certainly it's an asset class that people are still excited about, but certainly deflated.
Yeah. So on that note, I think being actually, how many of you are investors? Okay. How many of you are entrepreneurs? Okay. So I think from investor point of view, in some sense, particularly for early stage, like a well, not a long time ago, but the SPAC actually started 30 years ago. It's nothing new, but for the last few years, it's just gone crazy, right? So part of me, I thought, in the past, always like IPO is a holy grail, and now SPAC is basically another option. But having said that, we also have friends that have gone through a SPAC and now is going through lawsuits because sometimes whatever that you promise may not turn out to be, not as planned. And I also get some friends actually have deals where they raised maybe 10 or 20 million last year, and this year there will be banker wanted to take them public through a SPAC, and their revenue run rate is definitely not, on the same par as an actual public company. So just because there are more options doesn't mean that it's a way that you should push your company. If you're an investor or you're a CEO, this is just the beginning of the end. This is not the end. So that's that. To switch topic a little bit, since we talk about, we obviously both have spent a lot of time in China. I think the hottest topic this week is Didi, which is basically a disaster. So what do you think, Alfred? What happened? It's crazy.
Well, I wish I knew the backroom conversations about, I guess in the news we've read that that IPO was somewhat discouraged, right? And so since then, a number of other IPOs like Keep and Himalaya and others have been called off. And so I think it's going to be a question, right? So certainly this China, there's another sector that's kind of been deflating, right? And we've seen this with Alibaba and so forth, sort of Chinese companies IPOing in the US. And a lot of it has to do with US-China sentiment. Both the US and China both are not encouraging sort of this type of listing, right? And so I think it's a question to see over time how that plays out. But what is encouraged is Hong Kong listings, right? I'd love to get your thoughts about maybe Hong Kong.
Of course, I love Hong Kong. I'm born and raised in Hong Kong. But back really quick on the Didi thing, because think about it, this is so insane to me. Didi is the largest ride-sharing company in the world. And if you purely base on number, they're like over 450 million user, like it's 3-4 times Uber. And you would think, of course, the actual contribution margin is much lower because it is China, but still is huge. But having said that, it's so interesting. I was actually studying about the data security law was passed in June 11th. So this is not something that, it wasn't a surprise. But of course, you just don't do certain things before July 1st, and they did. And now you would think it's such a glorious company, but there's class action lawsuit going on now. And that's why as a founder, sometimes to rush to an exit is definitely not the way to go either. But if we say like the China IPO in the US bubble is at burst, what do you think?
I think deflating, and I think there are windows, and this is not a good window, certainly but I think it's probably still on the table. It's just, I think it's a wait and see in terms of when the next window will come, and more certainty will more guidance will happen, right?
Yeah.
What's your view?
I think definitely everybody's going to either delay or move to Hong Kong, which in some sense is great for Hong Kong because, in the past, we talk about it in car, tech stock is not necessarily as well understood for the retail investors in Hong Kong. But what's really interesting, even for US, more institutional or family office type investor in the US, now they realize, what, the world is our oyster. We don't necessarily only need to trade in the US. So secondary markets say, I can go to Hong Kong, I can go to China, as long as they have the right entity set up. But you are what's the name of the company that you're on the board of in Hong Kong?
Yeah, so I'm on a board of a SaaS company called Vobile, and it's been an interesting ride. This company was one of the first kind of US-based tech companies to list on the Hong Kong market. So and for quite some time, because of the uncertainty of the political environment in Hong Kong and for various other reasons, the company didn't get sort of a tech valuation, right? It was kind of a sleepy company for a bit. But for the last 12 months or so, the company has been on a tear, right? The valuation, market cap of the company went up about 15 to 20x. And the company didn't do anything substantially different. What changed was the way it's valued, right? It was being valued at 3 times revenues, historical. Now it's being valued at 20x forward, and that's it, right? And so the valuation went up about 15x, and there was a lot of participation from Chinese, China-based funds, insurance, pension, and various others, and also from strategics, right? So Ant, for example, took a 10% stake in the company on the secondary market and really propped up sort of the company from both a strategic and also a long-term asset kind of holder standpoint, and various others, right? So it's getting to the point where it's becoming a significant company, probably one of the more important SaaS companies on the Hong Kong market, probably going to be included in the Hang Seng Index, one of the indexes in the near term, and it's been a fantastic ride. And so I think that's what's changed really. It's that I think traditionally companies in the Hong Kong market were really valued as fully as a tech company, but now they're getting the 20 times forward revenue multiple and so forth. And now it's become and it gets participation from all that Chinese liquidity as well as US liquidity. And so it's really benefiting.
Yeah, and on that note, on the top 10 largest internet company in China, including the Alibaba, Baidu, except Pinduoduo, everybody actually are dual listed, and company like Tencent never even listed in US to begin with. So, but having said that, I think we talk so much about like China, US. There's also US IPO market as well, which if it's not like China related, I think last year just insane. So particular start with anything to do with enterprise, like Snowflake. Now, I don't know how much they're worth, but at the time, at one point, it's like 90 billion, and even Warren Buffett got into it. And so I think US market is still pretty healthy.
I would agree. I mean, it's interesting. The whole FANG space is now called bond adjacent, right? So essentially the credit market, the yields are so low that people are looking to invest in great companies and tech companies relatively unscathed, actually benefited from the pandemic. So highly resilient companies, and now considered just sort of cash, just cash machines that are kind of an alternative bonds, right? And so the market is looking for more of that sort of product, and as well as growth, right? And so and we see the rise of these index funds like ARK and others, highly optimistic about the future. And given the low rates of interest and all this liquidity, I think the world is looking for growth, right? So I think the IPO market for tech companies is highly optimistic.
Yeah. So just to recap, so IPO in US for US company, great.
Yes.
For a Chinese company, not so great.
For Chinese, uncertain for China.
Uncertain, and then SPAC, well, most of the SPAC lasts about 18 to 24 months. So the clock is ticking,
Right.
And who knows how this bubble going to burst or not deflated.
Well, I think this is a digestion issue because the Q1 was, if 2020 was a buffet, 2020, Q1 21 was like an ultra buffet, right? And so I think we just need to digest that for a quarter or two, and we'll see. And I think relatively optimistic long term, but it needs to digest the deal environment.
Yeah, so DD or Luckin Coffee or Danke, not so good. So too bad. Now let's switch topic on instead of public, how about M&A? It seems like everybody just want to go IPO these days, but still, like some of these bigger tech platforms, they are buying, right? What do you think?
It's interesting. I mean, I was observing this from the SPAC market, and so I'll give you some examples. So companies that went through a SPAC process raised a war chest. So in the autonomy space, Velodyne was one of the first to go through a SPAC process, and they raised a large war chest, thinking that they could acquire all the smaller players. Well, it turns out all the small players also went through a SPAC, like Luminar and others, And so they did not have a chance to do any sort of roll up of sorts with the war chest. So I think even if you have money, it's not necessarily, the liquidity is available for a number of players. And so the roll up opportunity may not be as simple as you think. The other angle I've looked at is that, the SPAC market, typically the fundraising size might be hard for a younger company to digest. And so there are proposals where 2 or 3 companies are looking to merge to create a bigger story, and then that way absorb that larger amount of capital and create a stronger investor relations push. And so that's another angle that people are looking at. What have you seen in the M&A market?
So, well, since we're in the Valley, recently I have a handful of companies that purely more acqui-hire. And what's interesting, and everybody in the Valley knows, it's so hard to hire a good engineer. They are expensive. So recently one of our companies got bought by Databricks, and they value pretty much each engineer, but this is vested over 4 years. And of course, it's up to you to negotiate, is it's like stock plus cash. But each engineer is valued at $1 million per engineer. Even though it's not necessarily even profitable or revenue generating, but because it's so expensive to hire, the Apple, Google, the FANG of the world are willing to pay up for talent. So that's interesting. But I feel like the one who's like doing interesting revenue, they're all kind of thinking instead of M&A to go through the actual SPAC or IPO route. So being an investor is actually a good place to be in some sense.
Yeah, very interesting. You have quite a bit of involvement in the crypto market. Maybe tell us a little bit about sort of that market, the liquidity opportunities, that has existed, may exist in the future, given sort of Bitcoin's slight positive.
Yes. So by the way, Raise Capital, we're not a crypto fund, but because DeFi, decentralized finance, is one of our thesis, so we do pay a lot of attention to it. And one of my best investment in my 500 days is Solana. So that's like super interesting because they actually gone through not the crazy route, because we also have seen project where they launched the token and then 2 months later they basically get listed on the crypto exchanges. It's insane. Solana actually went through at least 2 to 3 years. Still compared to traditional market is very, very short. They got listed about 2.5 years, but after that, the investor will also have lockup. So very similar to public market, we have 6 months lockup. But it's very different in terms of compared to a normal market, because usually you pick a normal company, you go IPO, you pick one exchange, right? The New York Stock Exchange or NASDAQ. In the ICO, so the initial coin offering, or these days another word is initial exchange offering, you can actually go listed on multiple exchanges, and they run 24/7. So one token could be listed in 10 or 15 different exchanges and create a lot of liquidity. It's just fascinating to learn. And I'm long crypto. I think but the market is driven so much by Bitcoin, and we hear crazy news every day. It doesn't matter from China or from Elon or whatever that's going on. But I do think that there's a lot of really interesting token raise that is related to the DeFi space, which we're super bullish.
I'm trying to imagine monitoring these coins 24/7. I mean, last year when I was trading in the public markets more, I'd set my alarm at 6 a.m. Every day it's pretty tough just for weekdays.
Yeah.
But maybe you could talk a bit about, I think another deal that you did that was quite interesting was the FTT coin, FTX deal.
That's interesting. So FTX, for those of you who are into crypto, they are, like, in my mind, basically the Coinbase for the rest of the world. Last year they did 1 billion in revenue, and more than 50-60%, very, very profitable. So at the time when they first raised, and there's a lot of token projects like that, they don't even raise equity, they just raise token. So the token been amazing for us. And sometimes they did a reverse as well. So they're going through an equity raise now, but there's raising off of the actual revenue. Yeah, it's an amazing, and this is a classic cross-border story, which the founder CEO, his name is Sam Bankman-Fried. So Sam, very, very young, he's 29 years old. And he moved to Hong Kong and set up shop there because all of his users are actually non-US user, even though now they're setting up office in Chicago. Anyway, it's an awesome token. Everybody should buy it. But I am not a financial advisor. Please don't listen to me.
I'm definitely buying.
All right. So with that, I think that's pretty much covered everything. We talked about crypto, we talked about normal IPO and exit and M&A. Any final thoughts?
Final thoughts. At the end of the day, the company has three important stakeholders, right? The customer, the employee, and the investor. And probably I'm one of the few investors say, we should put us last. Really focus on. I think the best companies that are built in the marketplace really focuses on the customer experience first, the employees second, and then the investor last. And it's great to talk about these capital markets and optimizing and really getting these amazing returns without doing much for the customer and employee. But I really think these things are short-lived. And so I often think the best companies really stick to the basics and really focus on the customer. And these capital markets, are really non-events in my opinion. I mean, it's important to focus on from time to time and capture a window, but really not the most important thing to focus on.
So with that said, my 2 cents is often, it's great to see your company name raise how many gazillion dollars on TechCrunch, but what the metrics and the KPI that really matter is not how much you raise, it's how much you make, the revenue, EBITDA, growth rate. Those are the true KPI all of us should focus on. And I know there's a lot of money out there, and probably some of your investors that go raise as much as you can, but that's really not the right focus. The focus is really to build a company, and fundraising is part of the journey, but it's not the only thing that you should care about. So with that said, that's the end. And should we do Q&A?
Yes, up to the audience. Do you have any questions for Alice and Alpha?
Andy.
Edith, just on your last point, with all this abundant equity as you're talking about, you just go pre-COVID. You remember when we had the squabble with when WeWork was trying to go public, and then all of a sudden there was focus back on unit economics, et cetera. Do you think with all this abundant equity that people will listen to your advice on, sort of EBITDA and unit economics, or do you think, sort of we're back in the mode of growth versus profitability?
So a couple of weeks ago, before DD went public, I actually CNBC, and then I talked to a friend from Lyft. Just really wanted to learn what sort of economics that we should pay attention to if I'm going to buy the stock for DD. And the most important, and there's a whole New York Times article that actually talks about Uber, which is, what do they call it? The contribution margin, that is whatever your true revenue, not top line, not how much I pay for the ride, but the actual 30% that cut minus insurance, minus marketing costs. That is really the true margin that you should pay attention to. So Lyft right now is about 51-52%. Uber is 14%. When I was looking through the S1 of DD, that term doesn't exist. So I think at the end of the day, sure, you can talk about we raised billions of dollars, but the public market is not going to be linear on what truly matters. And if we're going to be a long-term investor and long-term company builder, eventually it's going to bite you. And it's just something that will come either way. Even now, your judgment may be clouded with how much money you make. But if you want to build a long-term company, you have to care about it one way or the other. Otherwise, WeWork could have gone public a long time ago, and yet they're still struggling with this fact.
Yeah, I tend to agree, and I think the challenge you're kind of pointing out is that there's just so much liquidity in this marketplace, whether through QE or debt or, I mean, just even money made during the pandemic. It's a crazy amount of money sloshing around. And I valuations have shot up and all kinds of deals are getting done. And a lot of deals are momentum deals, right? And so I think if you're trying to find value, I think, you almost have to look for those value, but kind of use your imagination to find it like a couple of years ahead, right? So if you look at the SaaS companies, traditionally they're valued 6 to 8 times revenues, they're valued at 20 to 30 times revenues now, right? And so you have to imagine that these advantages that the companies are investing in will persist for a number of years, and your money is almost on hold for the first couple of years, 1 or 2 or so, I don't know, depending how crazy this bubble goes. But that thereafter you'll find the value that you're looking for. So you almost have to kind of either you don't participate, right? So that's one strategy. And if you believe there's going to be a macro kind of slowdown of sorts or other things, you don't participate now. You try to time the market. If you're not trying to time the market, you just have to kind of use your imagination a little bit and think forward a couple of years. And it's hard to do. It's very not an exact science.
Yeah. So, what's your view on the public market? Do you think it'll continue like this for a while, or some people think it may have a correction or very soon? What's your view generally of the market and also the economy overall?
Yeah, one thing I've learned from the public and market investors is that they don't forecast the public market, right? I mean, we can have our opinions, but we're typically wrong if we had a crystal ball. We wouldn't be sitting here, we'd be in Puerto Rico somewhere, I guess. But yeah, so I mean, I think you just have to find value where you can, and just focus on that.
So this is it was a more personal investment. I did a secondary in 2013 with Palantir. And after 8 years, I thought this thing will never go public. And then they went through direct listing. And it was an interesting structure because it was through SPV. When they first direct listing, they sort of released one third of the stock. I'm like, this thing is direct listing, no IPO pop. I sold it. Then it went up like crazy. And my biggest lesson learned this few years is really the art of being an investor is not only about making the investment, is actually the art of exit. And I think that the whole market, it really depends on which vertical that you're talking about. Even the whole market, there's always going to be things that go up and down. But in general, at least me personally, I'm very, very bullish enterprise software. I think that the world cannot afford to let COVID happen to them again. And the US, certain industry, including banks, healthcare, are all super old school enterprise system. The world, at least China is actually quite ahead, is the other way around. So US really needs some reboot with a lot of the enterprise software. So I'm bullish on that. And I think that's it.
Yeah, Sean Fire from US. So is the education sector is part of your portfolio? If so, what kind of companies are you looking at with space development? And you like to plan education?
I don't focus too much on education, but do you have any opinion?
I have opinion, but it's like not qualified opinion because I don't invest in education, not because there are definitely funds in the Bay Area, like Learn Capital, Al Ventures, there's specific education focus. I actually personally think that China market is so much bigger in terms of education than here. Here, most of the deals are just take forever if you want to try to sell to school district or individual school. And just the whole dynamic. I have a friend that used to work on M&A at Goldman, US guy, but speak Chinese. Like the type of deal that he does here, and then the volume of deals that he do in Greater China, it's like 10 times. So I think it's interesting. There's definitely very great education focused investor. Unfortunately, not at least not for our fund.
Save the networking session.
Sounds good.
Yeah. All right, thank you very
Thank you so much.
guys.
Yay.
Thank you, Amber. Thank you for this session on the exit strategy, IPO, SPAC, cryptocurrency, etc. So up next, we have Linda Zhou. So she's a partner at KL Gates. CBS has been a long time focus for a lot of us, and so it's never fade away. So Linda, so it's all yours.
Thank you, Yifu. It's so great to be here. Hello, Jim. It's so great to be here after almost 1.5 years of working from home, and I met a lot of old friends, and I believe a lot of you know me already, so I'm not gonna spend time introducing myself, but basically I'm a lawyer. I do a lot of cross-border transactions. Yifu wanted me to talk about CFIUS, and I mean, in the setting like this, I feel like maybe it's better for us just to chit chat, CFIUS and the recent trends and the transactions that I work on. And before we do that, I probably wanted to pick up the topic that the previous panelists touched upon about DD, the audit topic this week. DD and some other my clients are affected, US IPOs are discouraged because of the news this week. So you probably have seen a lot of WeChat or Chinese or English articles about the China regulation over US IPO for Chinese companies. And this is quite sad because for cross-border transactions, like entrepreneurs or VCs investing in these cross-borders, that means double regulations. In addition to CFIUS and US, stringent US regulation, we now also need to face the more uncertainty from the Chinese governments. A lot of articles about this VIE structure. So a lot of people start having doubts on how the VIE is going to work. Is that going to be challenged by Chinese governments? So I personally, I still have a lot of confidence in VIE. I represent a senior transaction that was more than 20 years ago. So VIE, starting from 20 years ago all the way to now, has experienced ups and downs. Almost every 5 years, people started picking on VIEs, and there are news, very negative news about VIEs, and people cast doubt on VIE whether it's going to work. So I'm actually still pretty confident because I've been through those ups and downs, and I have a lot of confidence in VIEs. But I think this DD event or news may prompt us, people who do a lot of cross borders or investing in Chinese companies, we start thinking about how we're going to structure the VIE. You may need to have a different strategy for VIE structure. For example, where your IP is going to be vested. A lot of entrepreneurs from like Silicon Valley going to China returnees, they started developing semiconductors or AIs, and then they vest all their IPs in Chinese companies. Now you may need to rethink about that, right? Or you use China as your R&D center. Now, because the new patent law in China, whether the China developed technology can be applied outside of China for patent, that's also a question. So I think the VIE structure needs to be revisited. I still have a lot of confidence in that structure, but I think we just need to maybe do a little bit tweak on the structure. So back on the other side of the coin about the US regulation CFIUS. I think, no, I didn't do any PPT because it's really casual setting. So I wanted just to share some misconceptions that based on my practice that people usually have. I can share with you, before I do that, I can share with you a little bit about what I do on CFIS. So a lot of companies in the US now continue receiving Chinese money, Chinese investors' money. A lot of sectors are, in the biotech space, less on the AI or semi. So usually the Chinese investors want us to, if we are on the company side, we're company counsel, and we are asked to provide a legal opinion, sort of, to provide a comfort letter. I would say that it's really not a legal opinion, but Chinese investors like to call a legal opinion. So it's like serving a comfort letter to basically the letter will say, the company, whether the company has CFIUS issue or not by taking the money from Chinese investors. So we do a lot of that. For M&A transactions, we do a pre-closing analysis. We want to analyze how much risk how much CFIUS risk this transaction would have. Buyers usually are reluctant to continue if they learn that the CFIUS risk is greater than no CFIUS risk at all. So we also do CFIUS investigation. I have to say that a lot of CFIUS investigation are handled very confidentially. So actually many companies are investigated, but they didn't get penalized at all because there is no CFIUS issue later right now. So we represent companies in dealing with, communicating with CFIUS committee about the CFIUS issue. So based on those experience, I just want to share with you some misconceptions that I oftentimes have seen. I made a list when I was sitting in the audience and I think number one misconception is a lot of people would think because they are very influenced by the media, by articles. And so they tend to think that, oh, wow, I cannot take Chinese money anymore. I cannot sell companies to Chinese buyers. Otherwise, I'm going to be, may have some personal liability, something like that. I think that's a huge misconception. Actually, the truth is, I still do quite a lot of investments from China or Chinese investors. Although semiconductor space are less than before, but biotech AI still as active as before. So what you really need to look at whether you have a risk, CFIUS risk, or how much risk do you have is you need to do an export control analysis to make an informed decision. Export control and the CFIUS used to be two separate regulations. Now it's interlinked, correlated. And for most of technology companies, whether you have CFIUS or not, by and large, depends on whether you have export control issue. Okay, so you need to do an analysis. It turns out that many semi companies, they did an export control analysis and they got the classification. They got the EAR 99, something like that. That means they're okay. They're not a prohibited technology under export control. Then that means it will be very little CFIUS risk if you take the Chinese money, right? So I think the number one misconception is overall, universally, a lot of people think that they cannot take Chinese money. That's not really true. Still a lot of transactions going on. I can share with you last year, I still spun off some companies, for example, 5G companies from the US to China. So a lot of things can still be done. So the number two misconception, I mentioned export control. So many people think that export control is only relevant if I export my product or technology to China. So that's a misconception because export control, the export is not just export. It actually covers a lot of activities, cross-border activities. Just give you an example. Now it's about 8 p.m. here. It's about 11 a.m. in China. Now, if you have the China team, the US team and China team started, talking about how to develop the IPs together. This communication itself is export. For another example, if you hire, if you have team in China and there are team member in China that want to travel to the US and you want to get them trained in the US, so you get like a B2 visa or B1 visa, visiting visa for them to travel to the US to stay here with the US team for 6 months to get trained. That activity itself is export because you hire a Chinese to, have access to your technology. So export is very widely defined. It's not just exporting technology or product, it's about the information transmission. Okay. The third misconception I oftentimes see is about investors, about VCs. So people know that under CFIUS, it become more sensitive to take money from Chinese investors. And what is Chinese investor? What about this US fund? What about this fund with the manager in the US or GP in the US? What about this fund that GP is a US citizen or a US green card holder? So we need to take very careful look at that. If the US fund is single LP, so for example, if the single LP is the SOE in China, then it is a Chinese fund, even if it's registered in the US. But if it's multiple LPs and it's managed by a US person, and the US person, the manager or the GPs, the compensation or their hiring decisions or investment decisions are not heavily influenced, affected by the Chinese LPs, then most likely it's not a Chinese fund, even if they have Chinese LP, right? So it's a case-by-case analysis. You cannot say, oh, this fund has a name bearing an SOE in China, then this fund is a Chinese fund. No, that's not true. Most of the time, this fund has a lot of other LPs, and the main LP does not have an influence on decision making. Then it's not a foreign fund, it's a US fund. Okay, number 4 misconception. A lot of VCs, and sorry if you are a VC, but a lot of VC tend to persuade their portfolio companies to reincorporate it to Cayman or Singapore or other jurisdictions, and they think that could get them away from CFIUS regulation. Huge misconception. I'm sorry to tell you that. Whether you are subject to CFIUS, the CFIUS law really look at the essence, whether you have US business, not where you incorporated. Even if you reincorporate it into Cayman, you reincorporate or move the team to Singapore, if your IPs are originally from the US or licensed from US schools, universities, you still have engineering team in the US, then you're still deemed as US business. You're still subject to the CFIUS law. So unfortunately, I just compared notes with one accounting friend just now. They also do a lot of reincorporation into Cayman, reincorporation into Singapore. That really not solve the issue at all. I think that's about it, the misconceptions that I usually observe. If you have any question, let me know. Otherwise, I really enjoy seeing you all.
Thanks for sharing that. Thanks for sharing those misconceptions. So any questions regarding CFIUS or in there? Or maybe we can save it.
Sure,
for
okay.
networking
Thank
session.
you.
Thank you, Anita. All right, Andy, it's your turn. So Andy is a managing director at Silicon Valley Bank, and he's about to share how Silicon Valley Bank promotes cross-border business.
Thank you.
Good evening, everybody. I think, like others and like Linda before me, I realize that this is, I've spoken on a lot of events over the course of the last year, but all over Zoom. So this is the first time I'm actually speaking in front of a live audience in like a year and a half. So hopefully I'm not too rusty at it. But again, my name is Andy Tsao. I'm a managing director at Silicon Valley Bank. Really nice to be with you tonight. I want to first thank our organizers, Yipu and JJ Lake, for this nice event and the invitation to speak to the group. I've been with the bank for quite a number of years now, more than 2 decades, and have really spent my time on sort of the international expansion, and now in the last 10 years, really focused on sort of cross-border business activities. And the 2 businesses that we reference here, Yipu, how should I change that? Should I just? Oh, got it. Super, thank you. So the 2 businesses referenced here, we have Asia Link and Global Gateway. So my colleague Lee Song actually runs Asia Link. He had a conflict, so he can't be here tonight. And Asia Link is actually our business that's focused very much on cross-border China business. We have a joint venture in China, 50/50 JV, that is focused on the tech and innovation economy in China. And we look to help Chinese companies or entities that come to the US or our US clients as they look to expand into the China market. Our Global Gateway business does a very similar thing. In fact, they were both one and the same for quite a while. I actually ran both businesses at the start because they do the same thing, just focused on different regions. Global Gateway focuses on India, Latin America, Middle East, and Australia and New Zealand. So what I plan to do in the next like 15, 20 minutes is sort of give you an overview of Silicon Valley Bank and sort of drill down a little bit into the Asia Link and Global Gateway businesses in terms of how we're helping with cross-border activities. So I guess first let me ask the question, those in the room, have you guys heard of SVB, Silicon Valley Bank? 1 or 2 nods, a couple of nods, okay. Great, well, I'll try to go over quickly over the commercial aspects of it, but why don't we get started? Okay, well, Silicon Valley Bank has been around since 1983, so we're almost 40 years now. I neglected to mention that again when I joined the bank back in the late 90s, we were only about a few hundred people. Today we're about 5,000 people, so we've grown a lot over the course of that period. Today we are, the largest bank one of the top 20 largest banks in the U.S. In general, and certainly the largest bank that's focused on the tech and innovation ecosystems. Okay, so this top, the sort of bar at the top talks about the various stages that we work with companies along their journey. So we really work with companies from angel financing to infinity, effectively. So starting from the left, if you're a seed or angel-backed company, we have a startup banking group that works with you until the Series A funding. Then we have another group we call Accelerator Growth that takes over from there. When you get to 75 million in revenues and up, or in a larger multinational company, we have a corporate banking team that handles your banking from that point forward. So as you might imagine, every step of the way, an angel-backed company is very different from a venture-backed company to a public company, perhaps. And so we have our bankers are segmented by stage. and by sector. Of course, investors themselves, the venture capital and private equity firms, has become a very big part of our business. We actually work with 2/3 of the VCs in the US at this point, we count as customers. And that business has become almost half of our total banking business. So it's almost the lion's share of what we do today. And finally, we have a private bank. In fact, just last week, we announced the closing of a acquisition that we made, Boston Private Bank and Trust, a $1 billion private bank that we brought in that will really accelerate our capabilities to work with entrepreneurs and investors in terms of their personal banking. Again, the 97% is talking about our loan portfolio. So lending as a bank, as you might imagine, continues to be one of the biggest activities that we have. Our loan portfolio is about almost $50 billion today. And 3% of that is to startups. And that's part of what the bank is, has been known for, is sort of the creative lending that we do for venture-backed technology companies. Some people call it venture debt. And but in actuality, most of the lending that we do is to larger companies. And hence our loan performance, even in difficult times like 2020, has performed very, very well. And again, this statistic here that half of the bank works with half of the venture-backed tech companies across the US. So some people say that, well, if you're a bank that only focuses on technology, you must be very, very concentrated. And if something happens to the tech sector, that, the bank could get into trouble. And, that in fact, is generally true when we, in the year 2000, during the internet bubble, we struggled quite a bit because the whole tech sector had been impacted so much. But the way we look at tech and innovation today is that it's quite diverse, right? When you look at all the different subsectors, and we count more than 132 different subsectors within technology. And these are the sort of the major themes within the bank that we specialize around. So energy resource innovation is sort of clean tech and ag tech. FinTech is one of the hottest funding sectors right now, so we have a specialization there. Hardware and frontier tech, continues to be one of the strengths of the Bay Area, and certainly a specialization. You have drones, autonomous cars, that kind of thing. Life sciences and healthcare, very fast-growing segment for us, makes up about 20% of our business today. Software internet is the biggest part of our portfolio, as you might imagine. Probably 40% of the corporate business that we do is within that segment. And again, I mentioned the banking investors themselves is about nearly half of what we do today. And the only thing that we do outside of tech is premium wines. And if you think about it, how do we get in the wine business? When entrepreneurs and investors make a lot of money, they decide to get into the wine business in Napa and Sonoma. So we have 50 bankers in wine country that work only with wineries. It's become a fun business for us, and we try to work that intersection as much as possible. I'll skip the bottom bar there. I'll come back to that a little bit later. Okay, getting into our footprint. And so we're in 30 markets across the US, in every major technology market where you generally have venture capital and startups, right? That makes sense for the US. As far as internationally, the UK business, I spent actually over my career, I actually started our London office back in 2004, as noted. Happy to say today we have more than 200 people in our UK business, a full branch, and growing very quickly. In China, we set up our first rep office in Shanghai in 2005. We have a business in Israel, and the JV itself was approved in 2012 with the Shanghai Petroleum Development Bank. Recently, in the last few years, we have rep offices that we opened up in Europe, in Ireland, Germany, and Denmark. And then finally, in just recently in 2019, we opened up our bank in Canada, in Vancouver. In Toronto. Going the wrong way here. Some of our clients, these are, we're always very proud of our clients, some notable names here. And in terms of the different areas within the bank, most of what I've been talking about falls into Silicon Valley Bank. It's the commercial bank. We do have a funds platform that's called SVB Capital. So within that, we have about 5 billion assets under management, mostly a fund of funds. So we invest in the top VC funds across the US. And we also have a direct investment fund that's investing in top venture-backed companies. I talked about the private bank. And lastly, we have an investment bank that we acquired just a few years ago in Boston called Clearing. And it's a healthcare specialist bank, full service, does anything from equity raise to capital markets to advisory work, very specialized in the life science and healthcare sectors. But now over the last couple year and a half, we've been diversifying more into tech. So you can see that's an area that we expect to grow as well in terms of our investment bank capabilities. So it's been a very, very busy time at the bank. People have asked, hey, how did SVB do over the course of 2020? And I think what's been reflected here, whether it was in Edith's and Alfred's panel or Linda, that the startup economy has boomed all around the world, right? And it's certainly in the US, where we had $166 billion invested, a record year for venture capital. So Silicon Valley Bank kind of sitting in the middle of all that. We had our best year on record, which was really strange. I would never have guessed that at the start of the pandemic in March of last year. Just some metrics about the bank. I guess I'll just focus on, I mentioned the $48 billion in loans, assets $142 billion. Again, that puts us within the top 20 of US banks by asset size. We have, if you look at deposits and investments, almost 300 billion, while our loan portfolio, you can see we're a very, very liquid bank, a lot of deposits in the bank, and we can't lend that money out fast enough. The loan portfolio is only 50 billion relative to the deposit base. So it's been a really nice feature of the business. There's just a lot of liquidity. And as you might imagine, we don't pay the highest interest rates for deposits. And so that works in our favor. Again, almost 5,000 employees. I think we had about 1,500 last year alone. And you guys are probably struggling with the same things. I have 2 colleagues on my smaller team that I haven't even met yet in person. So the whole, we've brought on a lot of people virtually who've never been to an SVB office, and we haven't met in person yet. So it'll be very interesting over the course of the year as we go back to the office. Again. Okay, so drilling into the talking about the JV a little bit here. So again, it's a 50-50 joint venture with the Shanghai Pudong Development Bank. We have full RMB banking capabilities onshore. And so if you think of, and we're a subset of the JV bank is a subset of the US bank in the sense that it's focused very much on the same sectors, working with startups, working with the VCs. We don't have all the products and services that we have here in the US, but we continue to add to what we have in China. So if you think of for cross-border purposes, our US companies are going to China. We have 2 ways to work with companies. One is on our US platform offshore. So those companies that, like Linda was mentioning, hey, if you raise US dollars from offshore US investors, they tend to ask you to set up a Cayman entity, and then you have the Chinese company sits underneath the Cayman entity. So you need services on both sides, right? You need a bank account at the holding company level to receive the investment, generally speaking. And then you go through the onshoring through a WFOE or the IE structure to get the money onshore. And when the money's onshore, then we can work with you within our joint venture bank. So I think yeah, just very quickly in terms of timeline, again, launched in 2012 in terms of our first banking license, which was only in US dollars. So it was, you know, pretty limited what we could do initially at being licensed to do dollar business in China. And but by 2015, we got our full RMB bank license, and we have branches in Beijing, Shenzhen, and we're just about to launch in Suzhou this year. So again, what are the services that we're providing for cross-border Chinese inbound activity, meaning inbound into China? So we, like the US business, we can provide debt financing for your onshore Chinese business, whether it's venture debt, as I mentioned, the sort of creative lending for startup companies that can be, in some cases, loss-making. As those companies scale, we can provide more conventional bank facilities. Obviously, all your sort of typical corporate banking services we can provide as well. Investment products, and you know, I think this is where is part of the bank's secret sauce and how we add the most value. And again, if you think of us as being so intertwined within the innovation ecosystem, where we bank half of the entrepreneurs and 2/3 of the VCs, that you know, our ability to connect you to people across our platform, and because of our focus and specialization, we can help you accelerate your market entry faster than it would have been otherwise. So those are some of the ways that we're working with our Chinese clients or our US companies that are going towards China. Some of our clients in China, sample. Again, the AsiaLink business. So again, my colleague Lee Song runs that. And for anybody who's interested in following up on that, if you have a specific opportunity that you're looking at, I'm happy to connect you to Lee. And again, he's based here and focused on, again, two primary activities. Chinese companies and investors are looking at the US market. How can we help connect them to our partners here in the US, whether they're companies or investors? Likewise, how do we help our US companies access the China market? According to Lee, I don't focus full-time on cross-border China today. As I mentioned, I focus more on our global gateway business today. But Lee tells me that our activity level for US clients looking to access the China market is still reasonably high. So, but we've seen the activity level of, you know, on the Chinese inbound side coming to the US slow down quite a bit. So Lee would estimate that for every 2 transactions we see going, that, you know, our US business is going toward China, and then you see one, you know, half of that or one company coming into the US. So I think Linda was saying she didn't see much of a slowdown. I guess we would say we've seen a little bit of a slowdown in terms of China coming inbound to the US. Lastly, again, with respect to global gateways, so you know, the markets that we focus on today, as the last line indicates, are Latin America. So we started to travel to Brazil in 2012. So it's been almost a decade now. India, Middle East, and Australia, New Zealand. And you know, for those of you who aren't following those markets, and there's no reason why you might be, but similar to what I described with the US, where we had a record year of venture capital in 2020, all these ecosystems around the world, there's like an echo happening. They're all exploding. And it's, you know, it's the same things that are driving it, right? You have the COVID pandemic is really, all of us being restricted at home has accelerated the move to digital. And in markets like India and Brazil, where the percentage of online to offline was lower than you have in markets like here in the US or China, certainly, the effect has been even more pronounced, right? And so, just some metrics. For India, for the half year, $10 billion was invested versus $4.6 billion last year. So it's more than double for just the first half of this year. So they could, more than double venture capital investment for the year if they keep going at this rate. And same with Brazil. Brazil numbers, Latin America, I should say, just came out yesterday in terms of the numbers were 10 billion for the first half versus 4.1 billion for all. Sorry, it was 6 billion for the first half versus 4 billion for all of last year. So again, they're growing at more than 50%. They could be growing at potentially 100% for the year. So these are fast-growing markets, and how are entrepreneurs accessing the U.S. market? There's the old, the conventional way, which is, hey, I'm a Latin American company, I want to sell into the U.S. market, so I want to set up a U.S. entity. We can certainly help you with all those kind of things. Less obvious, and this is very similar to the Chinese market, we have these entrepreneurs want to raise money from U.S. investors. When they do that, just like China, the U.S. VCs want them to set up Cayman entities or Singaporean entities, some sort of offshore structure. And while it may not help you with CFIUS, as Linda was saying, Cayman still gives you very good tax efficiency, and also it gives you the sort of corporate governance and legal framework that investors are very comfortable with. And so you still see, whether it's China or whether it's or Latin America, Cayman is very common in terms of offshore holding structures. I don't see that changing anytime soon, although around the world, as Linda mentioned with China, there are some movements for, India just came out with some more nationalistic type of policies recently, trying to pull more onshore to India rather than, have stuff being set up outside of India. So that's what we do at Global Gateway. Very briefly, we also spend time doing these kind of things. So we spend time with the diaspora community. I think you've probably run into the Thai organization here. So I'm on the board of Thai Silicon Valley, for example, and because it's, the Indian community gathers. And so we're able to differentiate what we do here because of our expertise that we're building up in India. And obviously, if you want to learn more about any of these markets, in fact, that's another aspect of cross-border that's increasing. Certainly in China's always been very strong in terms of U.S. investor interest, but Latin America, India, again, just mentioning how fast those markets are growing. A lot of that money that's fueling that growth is coming to the U.S. and other international markets. So our investor friends are asking us for help in terms of, hey, what do you know about Latin America? What do you know about India? How can you help us find good deals, find other partners? So there's a lot of increasing activity on those fronts. So that would wrap up my presentation. If there's any questions that you have on any of that, I would be happy to answer them or chit chat with you afterwards.
So as Andy mentioned, that's SVB is launching Suzhou chapter probably this year. So SVB is going to work closely with our Visa Holdings, our parent company, for some future collaborations. All right, so we got some more foods and wines here. Some people are chatting outside, so feel free to enjoy the rest of the evening. Thank you very much. Thank you all for coming.